Hi everyone, my name is Prachi Patel and I'm a senior in the AIM program here at Marquette. I cover domestic industrials and today I will be pitching CSW Industrials Incorporated, ticker CSWI. The ticker price as of 4/7/2021 is $138.14 as of market close, and it has an estimated price target of $178.46. To begin, here's a little history and breakdown of the company and its structure. CSW Industrials was founded in 2014 as a spinoff of Capital Southwest Corporation, which is also based in Texas. The goal behind the spinoff was to have a diversified industrial growth portfolio with well-established, scalable platforms and domain expertise. They were targeting two specific segments, industrial products and specialty chemicals. The industrial product segment made up 60.9% of the fiscal year 20 revenues, and specialty chemicals 39.1%. They serve many different end markets, with the largest contributor being HVAC and refrigeration, followed by architecturally specified building products, plumbing, general industrial or commercial construction, energy, rail, and mining. Some of their well-known brands are Smoke Guard, Rector Seal, Balco, and Jet Lube. CSW currently has a global presence. Around 84% of their revenue does come from the United States, but they also experience sales in China, Japan, Germany, India, UK, France, and Italy. In the third quarter of 2021, they experienced a 10.1% growth in their industrial products business unit. 7.6% of this growth was organic, coming from the increased need for renovations as work and school from home continued, as well as preemptive distributor stockings. Their specialty chemicals business unit did suffer some losses in the third quarter of 2021 as the pandemic resulted in macro-level shutdowns in the rail, energy, and mining end markets. This, however, has resulted in a helping hand for CSW as cost reduction and sales initiatives has increased the operating margins. To further help expand and increase revenues for the specialty chemicals unit, CSW has announced a joint venture with Shell to target rail class 1, 2, and 3, as well as U.S. mining end markets. The gain for CSW in this is that it will have access to Shell's vast distributor network to provide to new customers and increase their share of wallet growth with existing customers. A plan has also been derived to migrate Shell's production for their joint venture to CSW's Texas manufacturing facility to drive production consistency and utilization. CSW has a proven history of sustainable growth when it comes to shareholder value, which they have been accomplishing through maintaining a strong balance sheet and conducting efficient and strategic capital allocation. Since 2015, they have made 6 acquisitions worth $465 million in attractive end markets that have aligned target metrics to CSWI. They have also returned $100 million to shareholders through the third quarter of 2018 with dividends and share repurchase programs. The share repurchase program had its inception in the third quarter of 2018, and they have since purchased 1.4 million shares worth $81 million. The dividend program was initiated in April 2019, and for 8 consecutive quarters has now distributed $16.2 million. This goes to portray the sustainable growth that is provided to the shareholders by this company. The current one-year shareholder return for CSWI is 118%. This is far higher than the U.S. market average of 62%. I recommend investing in CSWI because they have a very good grasp on expanding their company through organic and inorganic ways. They have 3 research and development facilities to aid in organic growth and make strategic acquisitions to help increase their market share. TrueAir, one of their recent acquisitions, is to add an estimated 33% sales growth, as TrueAir's fiscal year 2020 revenue is an estimated $108 million. TrueAir was purchased for a staggering $360 million. Despite this, CSW has a respectable leverage of 1.95 times, with an additional $55 million remaining in their revolver and $18.3 million in cash. All of this goes to show that they are a financially sound and stable company and are able to exercise risks in a calculated manner, making them a safe growth investment. TrueAir was acquired by CSWI on December 15, 2020. TrueAir is a leading supplier of passive air handling solutions for residential and commercial applications. It was purchased for $360 million. That is 10 times its 2020 estimated adjusted EBITDA. 25% of this acquisition was financed with common stock, 850,000 shares, and 75% of the transaction came from cash and the revolver on hand. This acquisition is significant because it allows CSWI to own a state-of-the-art manufacturing facility in Ho Chi Minh City, Vietnam, that would be able to manufacture all TrueAir products. This facility, that was built in 2004, has a daily production capacity of 100,000 grills, registers, and diffusers. The facility provides the ability to offshore production, helping to localize supply chain, in turn saving on manufacturing costs. TrueAir sources raw materials from a regional Asia-based supply network with no key supplier risk, providing supply chain certainty. This location in Vietnam is also a strategic footprint for future growth into the East Asian market. TrueAir derives its organic growth through ongoing product innovation, increasing market share through acquiring new customers, and share of wallet growth with existing customers. TrueAir's acquisition has provided a 5.3% inorganic growth towards CSW's third quarter of 2020 revenues. With this acquisition, CSW Industrials would gain a manufacturing facility in Vietnam, 5 distribution centers across the U.S., and an office presence on the U.S. West Coast in San Francisco, helping to secure market share and presence in the surrounding areas. CSW has experienced impeccable top-line growth since the 2014 spinoff. They have experienced a 9.6% CAGR for fiscal year 16 through 20. Of this growth, 7.2% of it was organic, and 2.5% of it was inorganic supplied through the 6 acquisitions. The strongest drivers for this growth were through the end markets of HVAC, which grew by 13.7%, architecturally structured building products, which grew by 15%, and plumbing end market, which grew by 8.6%. The smaller markets grew between 9.5 to 1.5%. They've also been able to operate with lower gross margins, on average of 46%. This is much lower than the industrial's average of between 52 to 54%. And with how little leverage they have as a company, they also have a very high return on equity at 15%. This is a very important factor for increasing shareholder value. Despite operating within a cyclical industry, CSW Industrials is experiencing significant demand from the end markets. This, in combination with their ability to cross-sell new and improving products through the help of their 3 research and development facilities in the U.S., they are able to acquire a share of wallet growth from existing customers, helping to maintain increasing and healthy top-line growth. The Biden administration recently pledged the $2.3 trillion infrastructure plan that will go over the next 8 years. Within this plan, $621 billion is for transportation, $400 billion is for long-term care facilities, $300 billion for manufacturing, and $213 billion to build and update affordable housing. The services that will be required by each breakdown of the plan are something that CSW can offer. Within the specialty chemicals business segment, construction machinery lubricants, grease, degreasers, cleaners, fire-stopping caulks and sealants can be provided by CSW. Within the industrial product segments, all HVAC products, in addition to fire and smoke protection products, storage, filtration, and applicating equipment, will be required to complete this plan that can be provided by CSW. 12.5% of the U.S. market for environmental control for machinery equipment products is saturated by CSW. The increase in government infrastructure spending can provide a significant increase in sales. To reach an intrinsic value for CSW Industrials, I constructed a 5-year DCF model using a terminal growth rate of 2% and a WACC of 7.10%. I reached an intrinsic value of $202.48. Upon conducting a sensitivity analysis of 50 basis points on the terminal growth rate and the WACC, prices ranged from $160.23 to $247.31. Additionally, I used an excess return model, with the assumptions that return on equity would be 25%, the retention ratio would be 95%, expected growth rate would be 24%, and cost of equity would be 8%. This gave me an intrinsic value over the next 10 years to be $157.78. Next, I used an enterprise value to EBITDA multiple valuation using a blended average of 5 competitors. The multiple of the EV to EBITDA was 12.8 times. This resulted in an intrinsic value of $85.42. The fourth valuation that I used was a price to cash flow multiple. Using the same competitors, the blended average for the price to cash flow multiple was 15.87 times. This resulted in an intrinsic value of $17.87. The models were then weighed 70, 20, 5, and 5, and a price target of $178.46 was reached. This created a 29.19% potential upside. Some of the risks that can affect CSWI's growth in the future is the lingering pandemic and the seasonal cyclicality of the HVAC end market. Many of the foreign countries that CSW serves were or are still under strict lockdowns due to the COVID-19 pandemic. This has significantly been reported through the decrease in revenue growth outside the U.S. in the past fiscal year. However, vaccinations are beginning to pick up across the world, and within the next year, lockdowns should lift and sales in foreign countries should begin to pick up. The other risk is that a significant portion of CSW's products are sold into the HVAC market, which is seasonal by nature. While products are sold throughout the year, revenues tend to peak during the spring and summer months. However, other end markets, such as plumbing and the architecturally specified building products end market, tend to be cyclical in the winter months, helping to balance out financials and earnings. Joseph B. Arms is the Chairman, CEO, and President of CSW Industrials Incorporated, and has been with the firm since September 2015. Upon receiving his education from Baylor University, his management roles have included CEO and Chairman of Capital Southwest Corporation, from which CSW has spun out, as well as Vice President and General Counsel for many food and beverage companies, including Dean Foods and the Morningstar Group. Don Sullivan is the Senior Vice President and the General Manager for the Industrial Products Business Unit. He's a former CEO of Rector Seal, which is now owned by CSW, and has had experience as a division president for Goodman Global, a leading global HVAC company. Craig Foster is a Senior Vice President and the General Manager for the Specialty Chemicals Business Unit. His past leadership position of Vice President and General Manager was at Zeon Chemicals, a Japanese specialty chemicals company. CSW Industrials is a financially stable company that is continuing to grow through strategic acquisitions and product innovation through their research and development facilities. They are continuing to acquire new customers and increasing their existing customers' wallet share. They are well positioned to take advantage of Biden administration's $2.3 trillion infrastructure plan and increase top-line growth in a healthy manner. As a result of this, it is recommended that CSW Industrials be added to the AIM Small Cap Equity Fund with a price target of $178.46, representing a potential upside of over 29.19%.